Welcome back to our weekly update. I'm Charlotte McLeod with investingnews.com, and I'm here to give you a quick look at our top stories for the week. The gold price was back above $2,000 per ounce this week after briefly dipping below that level last week due to stronger than expected U.S. inflation data. Inflation was a key topic in the U.S. Federal Reserve's latest meeting minutes, which were released on February 21st. The central bank left interest rates unchanged in January, and the statement confirms that officials want to see more evidence that inflation is headed toward their 2% target before they lower rates. In fact, most are more concerned about cutting too quickly versus hurting the economy by keeping rates higher for longer. Last week's Consumer Price Index reading, which as mentioned came in hotter than anticipated, underscores why the Fed is reluctant to reverse course on rates too soon. And it seems that most market watchers expect it to hold steady in March. CME Group's FedWatch tool shows only a 4.5% chance of a cut at that time. Officials do seem keen to discuss the Fed's balance sheet at the upcoming meeting, with the aim of eventually looking to slow the pace of the runoff. In the more immediate future, keep an eye out for the latest U.S. personal consumption expenditures data. The PCE Price Index is the Fed's preferred measure of inflation, and it's due out on February 29th. This week also saw a number of major miners release their latest quarterly and annual results. Let's run through a few key bullet points. Newmont beat analysts' quarterly profit expectations, but took a hit as it recorded a $1.9 billion impairment charge, $1.2 billion of which was connected to a write-down at its Peñasquito mine in Mexico. Industry participants were also reportedly disappointed with the company's 2024 gold production forecast of 6.9 million ounces. Newmont completed its acquisition of Australia's Newcrest Mining this past November, and it's now looking to hone its focus on what it describes as Tier 1 assets. With that goal in mind, the company is looking to divest 6 non-core properties. Meanwhile, First Quantum Minerals said that in Q4, its net loss attributable to shareholders came to $1.45 million, or $2.09 per share. The company's future has been up in the air since Panama ordered it to close the Cobre Panama mine back in November. But alongside this week's results release, it revealed a large financing package. First Quantum plans to sell $1 billion in stock and raise $1.6 billion from a notes offering. Company shares reacted positively to the news, but remained substantially lower than they were prior to Cobre Panama's closure. That's all for this week. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.